Hey everyone, welcome back. Overall, Polestar was down 7% on Thursday. That's a 7% from Wednesday. So the Polestar stock has been slipping after making its public debut last week. So this comes along a report that is needed an additional 600 million. Bernstein Research says they need to be funding to continue operation in 2022. So the real question is, what's causing the Polestar stock to go down? So notes from Bernstein Research is dragging shares of the electric vehicle down today. According to it, the company is short 650 million that is needed to get through the rest of the year. This note says that Polestar requires 1.7 billion to continue operation in 2022. However, the company only raised 890 million from its recent SPAC merger. That's where the additional 650 million required comes from. Bernstein Research says that Polestar only needs to raise 600 million of this to keep going. Its option for further funding includes Chinese, Geely Holding, Volvo, or possibly even both. Now, news of the additional funding needed as PSNY seen a decent amount of trading today. More than 3.3 million shares have traded hands. That's closing in on the company's daily average trading volume of about 400 million shares. So the next question is, how will this affect Friday, today, the closing day of trading for Polestar? And that's what we're here to try to understand. So Polestar has dipped in price once again. It seems like each day the price just keeps on dipping to an all new low. And now people are wondering, should you even invest in Polestar? Is it even worth it? People are starting to panic. Always expect that Polestar could possibly go to $7, $6, even $5. That's no surprise to me. That's not the reason I'm investing in Polestar. I'm investing in Polestar because long term, I know it's going to be one of the biggest EV companies. And that's what matters, long term. It's not about short term. Nevertheless, let's just get into this video. So this is not financial advice. This is strictly for educational purposes. But we're going to go for a price analysis and we're going to try to understand why exactly is Polestar dipping in price so much. Now, the first assessment is that because it's a SPAC, there's a lot of the initial investors, such as angel investors, that are just getting out of the market right now as soon as they can. Because that's what happens whenever the market is going down. Everyone starts to panic and they all start to sell. So it's no surprise. Now, that's my first assessment. Second assessment is that a lot of investors in Polestar could be taking this opportunity to invest in other EV companies such as Tesla. And I'm still a big supporter of Polestar. I'm never giving up. Not even if the stock price go to $1 tomorrow, I'm still not giving up. But if you take a look at Tesla is undervalued right now. Market cap is less than 700 billion. This means a lot of investors know that this is a good time to invest in Tesla, and they're going to do that. They're taking the opportunity to do exactly that. And they want to invest in other companies, maybe Apple, maybe Amazon. Amazon had a stock split recently. Even Netflix is undervalued right now. Everything is undervalued on the market. Everything is up for sales. But let's just remind ourselves, it's not just Polestar that's doing bad. The entire market is doing bad. Now, let's keep in mind as well, if we go to companiesmarket.com, we can clearly see that Polestar holds a steady 7th place of the biggest EV companies by market cap. And that's good, that's key. Even with the price at $8.81, Polestar still holds a market cap of 18.7 billion. And because we're delivering more vehicles than Rivian, technically we're more valuable than Rivian. Maybe not in market cap, but certainly in sales and in volume of vehicles on the road. But as you can see, even the second biggest EV company, which is Li Automotive at the moment, I think it was swapping places with NIO. They're very similar. They're just around 36 billion in value, nowhere close to Tesla. All of these companies, you can consider them to be heavily undervalued, except for Rivian. Rivian is just not delivering enough in my opinion, and they will be lucky if they deliver 20,000 vehicles this year. But I hope they do, because I do want to invest in Rivian eventually. I'm just waiting for the price to go down a little bit more. But a crazy thing to understand right now is that Polestar had a 25% dip in the market of its price. And this is after 4 days of trading on Nasdaq. Our Polestar market cap was 22.7 billion. This was at the closing of the market on June the 29th, down from 27 billion after the first day of trading last week Friday. And now we're at a market cap of just around 18 billion. Now, I'm not complaining because I do like to see Polestar essentially being a lot cheaper as a company for me to purchase. I'm definitely not complaining. Personally, I want to keep Polestar as cheap as possible for as long as possible. I'm guessing Polestar knew that this was going to happen. They knew the market was in turmoil right now. They knew the market was performing terribly. And given that they were expecting this, even the CEO of Polestar released a statement basically saying, listen, we're not doing this public listing because we want to find funding. We're doing it for long-term purposes, not short-term purposes. We can get funding from our parent company, Volvo and Geely. And that's truth. That's the truth. Polestar has delivered 29,000 cars last year, 32,000 orders this year without the help of an IPO. Now, even at the price that Polestar is right now, I still think that it is seriously undervalued. I still think that this is one of the best pricing EV on the market you're going to get, EV stock wise. Now, I've also heard that a lot of people have concerns about Polestar because it's partly owned by a Chinese company. And as you know, the United States and China haven't been the best of friends recently. So there's a lot of controversy. Because of this, Polestar isn't getting the full attention they deserve. Because of this, they are getting underrated. And because of this, there's a lot of misinformation. What you have to understand is that Polestar is registered in the UK. So it's not registered in China. So the same rules that apply for Chinese companies do not apply for Polestar because they're not registered in China. And remember, they're also a publicly owned company that's partly owned by Volvo and Geely. So they're not a private company anymore and they're not registered in China. So the concern that a lot of people have questions if Polestar could face delisting in the future, as a lot of Chinese stocks face delisting on the American Stock Exchange. Well, this doesn't apply to Polestar because they're not Chinese. Of course, they're owned by a Chinese company, Geely, but like I said, Polestar is a public company. They're not private. So the rules are set up very different. Reasonably, personally, in my opinion, realistically, Polestar should be at least at $20 per share. Considering that this company is hoping to make 50,000 vehicles this year, $2 billion plus in revenue, not to mention their orders are growing over 239%, I believe, year over year. If their revenue can grow on the same trajectory, just imagine the next 10 years. So when it comes to Polestar price going down, I don't think we're in the end yet. I think the price is going to go down a little bit more. I think the market cap is also going to take a dip as well because obviously it correlates with the price. I think the price seriously could hit somewhere around $7. It will eventually consolidate just around the $7. I believe probably around 15 to 14 billion in market cap. There's very few stocks that have been going up in the last 30 days. Those are Li Automotive, NIO, XPeng, even a lot of the UK company as well. They've been facing a lot of downward trajectory. Another Chinese company, NIO, that's not the same as NIO, so they're two different companies, but even that one has been going up as well. So even in this turmoil market, you can see that Chinese companies, they're not having the same effect. It's a similar effect, but it's not the exact same. Courtesy of SPAC Picks on Twitter, I've got some good information on stocks that are being shorted. Thankfully, SPAC Pick posts these images quite often of stocks being shorted for Polestar. And if anything, I'm actually seeing a reduction in shares being shorted for Polestar. Previously, I was seeing hundreds of thousands of shares being shorted for Polestar. But keep in mind, these shares are being shorted way more regularly. So while they're lower in numbers individually, the quantity of overall shorts are much higher than usual. And it's reoccurring once again. We have a look at some more information on the shares being shorted for Polestar. You clearly see that it's being shorted more regularly. This is just in the last 23 hours. But every share can be shorted and every share is being shorted. In fact, I think Michael Burry is shorting Apple right now as we speak. So it's not all a bad thing just because people are shorting shares. It's not particularly good for that particular share, but every single share on the market gets shorted for some reason. And the reasons doesn't always have to be clear, but it does happen. So it's going to be quite interesting to see if Polestar keeps going down even more for the next couple of days before the market closes on Friday. It's going to be interesting to see if we can hit that $7 mark. We will start consolidating. Eventually, the share will start stabilizing around a certain price. Well, that's it for this video. So thank you for watching. Subscribe to see more, and I'll see you in my next video.